Remember that horrible story a couple of months ago where Wells Fargo, the bank, got caught fraudulently creating credit card accounts for its customers and fraudulently creating checking accounts for its customers that it was then manipulating to its own advantage? They would probably get away with that in a Trump administration if the Trump administration does what Donald Trump wants to do and gets rid of the legislation that Barney Frank wrote that prevents exactly that kind of thing. Barney Frank joins us next.
We're going to do a major repeal of Dodd-Frank.
We have to get rid of Dodd-Frank.
We have to get rid of Dodd-Frank. You know, you people borrow money. And Dodd-Frank really concentrates business in far fewer hands. I mean, if you look at what the result is.
One of the results that Donald Trump didn't look at, one of the results of Dodd-Frank, is the Consumer Financial Protection Bureau that was created in the Dodd-Frank banking reform bill that Donald Trump now wants to repeal. The Consumer Financial Protection Bureau is one of government's great, and I mean great, recent success stories. As of the last accounting, in the middle of last year, the Consumer Financial Protection Bureau has delivered over $10 billion in relief to consumers who have been unfairly victimized by financial institutions. The Consumer Financial Protection Bureau fined Wells Fargo $185 million in September for its abusive practices involving credit cards, including opening unauthorized credit accounts and bank accounts in the name of Wells Fargo customers, an outrageously fraudulent practice for which the CEO of the company was forced to quit. And Wells Fargo admitted guilt. They issued an apology. And Wells Fargo, you will notice, is now running TV commercials that include a veiled apology and kind of a vow to do much better and operate honestly from now on. Part of Donald Trump's Make America Great Again plan is to repeal Dodd-Frank and allow banks like Wells Fargo to then get away with the kind of stuff the Consumer Financial Protection Bureau caught them doing and fined them for doing. For more of what you can expect as consumers in a world without Dodd-Frank, we are now joined by the man who co-wrote Dodd-Frank, former Massachusetts Congressman Barney Frank. Congressman Frank, thank you very much for joining us tonight. I really appreciate it. Your read on where we are on the repeal, I noticed that Donald Trump's selection for Treasury Secretary is saying they want to repeal parts of Dodd-Frank, which is a little bit better than the way Donald Trump talks about it.
Well, let me read actually from today's New York Times. In Mr. Mnuchin, the aforementioned appointee, Mr. Trump has an ally whose nomination is expected to be well received on Wall Street. A number of traders and bankers contacted on Tuesday said. Since Mr. Trump's victory, United States equity markets have hit a high, with financial institutions leading the way. Having a Treasury Secretary, from Goldman Sachs, by the way, with broad experience as a financier, will sustain the view that the Trump administration will look favorably on Wall Street, not least in pulling back some of the regulations put in place by Mr. Obama. It's now clear that with regard to standing up to Wall Street, taking on the big banks, fighting for little guy, the Trump policy is going to be the greatest bait and switch since Trump University. This is a man who said, they put in the Republican platform, we're going to enact Glass-Steagall and break up the banks. Earlier today on CNBC with Lawrence Kudlow, who was a chief advisor to Trump on this, he said, well, we've backed away from that. That's not there anymore. So here's what they would repeal. Among other things, in addition to getting rid of the Consumer Bureau, and by the way, people should understand, before we created the Consumer Bureau, and Elizabeth Warren suggested, and Chris Dodd and I worked very hard to get it through over great opposition, if you were a consumer and you had been mistreated by a bank, you had to go to one of the bank regulators. You went to the Federal Reserve or the control of the currency. Those are nice people, but their primary job is to protect the big banks and to protect the economy. They don't worry about some older woman who's been cheated or a Wells Fargo customer. In addition, one of the things we did that the Republicans apparently want to repeal is to pass a law saying you can't lend money to people for mortgages who aren't going to be able to pay it back, which is bad for them and bad for the economy, because we have the system where the lenders now don't have to get paid back by the borrowers. They sell the right to that loan. They would abolish that. AIG went to the Bush administration for a bailout, which they got. You know, there were 5 bailouts during this crisis, all started by George Bush, although we Democrats get blamed for them in the popular mythology. But AIG went to the Bush administration in September of 2008 and said, you know what? We've sold these credit default swaps, a form of insurance against mortgage securities that aren't paying off, and we're $170 billion short of meeting our obligations. Well, we have in this law a prohibition against them doing that, a requirement that if they're going to sell those things, they have to do them through exchanges. We guarantee that people will be protected. So it is a reversion, essentially, to 2008. Now, you're right. It's not going to be easy. I don't think there are a lot of Republican members of Congress who want to vote to get rid of the Consumer Bureau, or who want to say, let's get back to the situation where derivatives are totally unregulated and people can incur enormous debts in the hundreds and hundreds of billions. And if they go bad, then the federal government has to step in.
And in his confirmation hearing in the Senate Finance Committee, Steve Mnuchin is going to have a lot to answer for, including his own past business practices involving foreclosures. He was described by some as one of the kings of foreclosures, and clearly that's going to be a relevant issue.
Yeah, he bought a troubled bank. By the way, for the Republicans, and this is relevant, talk about they don't like bailouts. Under the Bush administration, not to criticize them because that's the way the law was at the time, they had two choices if a major institution couldn't pay its debts. Either they let it go bankrupt, which they did with Lehman Brothers, which caused a terrible economic shutdown, or they paid off all the debts of AIG and kept it in business. Our law says no more of that. If a company, a big bank, comes to the federal government and says, we can't pay our debts, and they are so indebted because they've been allowed to be irresponsible, which our law prevents now, the federal government pays off their debts and keeps them in business. They can't do that anymore. Under the law, the federal government would say, okay, fine, you're out of business, here's the door, we're taking over your operation, and if we have to pay any federal money to reduce those debts, we're going to assess the other big banks to pay it off. There's this whole set of rules that we put in to make sure that people do not get indebted beyond what they can pay off, because it was that caused the crisis. And apparently that's what he wants to repeal. And again, the hypocrisy of this man saying, I'm for the little guy. Wall Street hasn't been this happy since Herbert Hoover made Andrew Mellon Secretary of the Treasury, because that led to the Depression.
Barney Frank, thank you very much for joining us tonight. We're going to need your guidance on this because we know there's going to be a big Dodd-Frank fight coming up next year. Thank you very much for joining us.
Well, it's one I relish. I think he's on the wrong side of this, politically.
Thank you very much. Appreciate it.